what are considered to be taxable wages? All right, so we talked about like who is, in a general sense, who is considered to be subject to Social Security and Medicare tax if they're an employee or not. So what kinds of earnings are taxable? What types of earnings are included in this tax base? So remember, it's just going to be earned income, but there are certain types of earned income that are excluded, that get some special treatment. What is included? So wages and salaries, obviously, if you're getting paid, whatever your hourly rate is or your salary, that is part of your pay, that is included in taxable wages. Also, the cash value of meals and lodging, we're back to those meals and lodging, if it's for the employee's convenience, it is considered to be taxable wages. If it is for the employer's convenience, it is not considered to be taxable wages. Just like in the last chapter. So same definitions. Bonuses and commissions as well are considered to be taxable wages. Doesn't matter how you're paid. If you're paid on a piece rate, still taxable wages, right? Also, there are certain types of non-cash compensation. So up here, this is all cash, right? US dollars that are deposited into your bank account. There are certain types of payments, though, that are non-cash that are also considered to be taxable for Social Security and Medicare. Certain gifts over a certain amount, we're not talking about little tiny gifts like, the holiday turkeys and that sort of thing, but something of some real value. A good example is like if you've been at, I know my husband's employer, for their administrative staff, after they've been there for 10 years, they give them a vacation. They can take a vacation. They give them kind of a menu of, and it's only the administrative staff that they give this to. It's a really, really nice perk. But after they've been there for 10 years, they get a choice of, okay, you can go, and there are places like Costa Rica and Jamaica and stuff like that. The value of that, so that's a gift. The value of that vacation is taxable income to the recipient, to the employee, and so they're going to have to pay Social Security and Medicare tax on that, on the value of that vacation. Stock payments. If you work for a company that has stock, sometimes they will pay in stock. And in fact, a lot of startup companies, this is how they pay their employees. They don't have the cash, so they pay them in stock. So, like if you were working for, I don't know, Tesla, back in the beginning days, maybe instead of getting a paycheck, you got a bunch of Tesla stock, which right now would be a pretty nice thing. Exactly. Yeah, if you were paid, 10,000, 20,000 shares of Tesla stock, it wasn't worth much at the beginning, but now it would be a pretty valuable asset to have. Those stock payments, whatever the fair market value is on the date that it's given, that is the value of, that is considered to be taxable wages. Okay. Other types of fringe benefits. So they use the example here, personal use of a corporate car or airplane. Personal use of a corporate car is much more common, where the employer provides a vehicle for the employee to use, and the employee keeps it at their house. Like because they're going out and traveling all over the place to visit clients or, whatever. A lot of like pharmaceutical reps and stuff, that'll be the case because they're doing a lot of traveling. They have their region that they're in. They've got to go and travel. But they get to use that car for personal purposes as well. So in addition to going to the doctor's offices that they're visiting, they're also using it to take their kids to school. They're using it to go to the grocery store. They're using it to go on vacation. The employees have to track how much personal use they have of that vehicle. And they track it by miles. And for every mile, I think the rate right now is maybe 70 cents a mile. For every mile, that 70 cents is added as taxable income. So if you had a corporate vehicle, you drove it 3,000 miles during the month, but 1,000 of that was for personal use. Now you have $700 of personal vehicle use that is considered to be taxable wages, and that is included for Social Security and Medicare tax purposes. You'll see when we go through like chapter 4, there are some benefits that are taxable for Social Security, Medicare tax purposes, but are not taxable for income tax purposes. Or there are certain exemptions that are exempt from Social Security and Medicare tax, but they're not exempt from income tax. So there's kind of or vice versa. So this list, although in most cases they overlap, there sometimes is not overlap in some of these benefits. They're going to be, so you have to determine whether or not the benefit it may be taxable for Social Security and Medicare tax purposes, but you're going to exclude it over here when you're doing the calculation for income tax, and then you do the calculations and you add all the taxes together and that. So that's just kind of an aside that is going to come up when we get to chapter 4. You'll see some differences. Tips. So if you receive tips of $20 or more in a calendar month, those tips are taxable. Now this is different from the $30. Last chapter we talked about $30. The $30 was to determine whether or not you're considered to be a tipped employee, right? And then your employer had to pay you, could pay you the tipped employee rate. This is to determine whether or not those tips are subject to Social Security and Medicare taxes. So if you earn $20 or more in a calendar month, then those tips are considered taxable. What employees usually do is they use this form 4070. If I can find it here, I had it up. This is the form 4070, and they will report the tips that they received in the previous month on this form. This has to be received, and they don't have to do it on this form. Employers may have a different form that they use, but this is specifically for reporting the tips. So this is filled out by the employee, and they indicate by the 10th of the month the amount of tips that they received the prior month. A lot of times the employer already knows this. If most of the tips were received by credit cards, a lot of the systems these days will track this on a daily basis or on a shift basis. But if it doesn't, this has to be filled out. So they report, how many cash tips did you receive, credit card and debit card tips, any tips paid out. So that would be if there's like a tip sharing. Yeah. It changed how, and it's only for 3 years, 4 years, I guess. It's in 2025 through 2028. It did change the amount for certain tipped positions, for certain tipped professions. They are able to exclude up to $25,000 in tips, only for income taxes, though. They're still subject, the tips would still have to be reported because they're still subject to Social Security and Medicare taxes. So that's an example now. It's a new example. And thank you for bringing that up because it gives me a good example of a type of income that is subject to one type of tax, but not subject to another type of tax. So, but that is something, so in this class, because that just passed recently, we're not covering it in this textbook, but it's a great example of that difference. So the employees would still need to fill this out and still report it because it is going to be subject to Social Security and Medicare tax. Now, when it's reported tips like this, it's the employer that actually pays the Social Security and Medicare tax. Where'd I go? Whoops, I lost it. Well, so they have to withhold the income taxes, but the FICA taxes, the employer pays the FICA taxes on those reported tips. There's kind of a difference between, like, reported tips are amounts. Sometimes there's a formula, so the employee doesn't tell the employer exactly how much they received in tips, but instead there's an assumption that, and I think that minimum assumption is like 7%, that you figure the total sales for the month, if you sold $1,000 worth of total sales before tax, and 7% of that was received in tips. So if they're under that kind of regime where it's an assumed amount of tips, that's called the reported tips, then the employer does not withhold the FICA taxes. They just pay them, because it could be that the employee didn't actually receive that amount in tips. Chances are they did, but anyway. So this form 4070 has to be filled out by the employee by the 10th of the following month. And then the employer calculates the amount of withholding based on that plus the wages that they've paid to the employee in the very next paycheck. So employer calculates FICA tax on tips, withholds from the regular paycheck on those reported tips. Let's see. Don't you love tips? They're complicated. Okay, so there are some wages that are specifically exempt. So again, we go back to meals and lodging. If it's for the employer's convenience, the value of those meals and lodging are not subject to the Social Security Medicare tax withholding. Sick pay, we don't just mean like you used a sick day. Like last week I had to use a couple of sick days. That's not the type of sick day. We're talking about like disability pay. Disability pay, there's no Social Security and Medicare tax on it because it's not earned income, right? You didn't earn that income. For individuals who are in the military, if they're a reservist and they are deployed for more than 30 days or activated for more than 30 days, if they receive a differential pay from their employer, that differential pay is not subject to Social Security Medicare tax. So for example, if they regularly receive $3,000 a month and the military is paying them $2,500, but the employer makes up the difference and still pays them that $500 difference, that $500 then is not subject to Social Security Medicare tax. Employer contributions to retirement plans. So if an employer contributes to an employee retirement plan, the amount of that contribution is not subject to Social Security and Medicare tax. So that's a great benefit. That's free money, right? If you can get an employer that contributes, that's a good deal. Employer-provided education assistance, there's two different types. One is job-related, one is non-job related. So job-related educational expenses, example of that might be if you're like a CPA, has to do continuing education every year. The employer pays for that continuing education. The value of that continuing education is not considered taxable income to the employee. It's not subject to Social Security and Medicare tax. So if they pay $1,000 for your 40 hours of continuing education, that won't get added to the employee's paycheck, and it won't be subject to Social Security and Medicare tax. Another type of educational assistance is non-job related. Here we're talking about tuition assistance programs. Employers can pay up to $5,250 for an employee to maybe work on their degree, work on their bachelor's degree, work on their master's degree, work on their associate's degree, and up to $5,250 is not included in taxable wages for Social Security and Medicare tax purposes. That's another great benefit. Now, once it exceeds $5,250, so if they paid $6,000 for, you decide to go to Iowa State and they paid $6,000 a year for you to go to Iowa State, get your bachelor's degree, $750 of that would be taxable because that's the amount that exceeds the $5,250. Right? So it's only up to $5,250. That's another great benefit if you can get into an employer that provides that. Let's see. Okay.